Welcome to this week's edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only. It doesn't take your personal situation into account. With all that said, let's get into our first chart. So I've got the S&P 500 up here on the screen. And this has been a constructive week. It's been a constructive week for the S&P 500. It's been gathering momentum since rebounding off the 100-day moving average 3 weeks ago. And on this chart, as always, I've got the 100-day and the 50-day moving averages. And I think that the big question to try and answer now, or to ask now, is this the resumption of the upward trend? Is it the resumption of this upward move, or is this part of an ongoing consolidation? And we only need to look back to August, to August last year, to see how an encouraging setup can turn south. So just looking at this, it's not dissimilar to price action what we're seeing now. We had like a strong upward move, we had a pullback, we had a rally off the 100-day moving average. We could have thought, look, this is looking encouraging, but as history tells us, there was more consolidation to come. So that's not to say that's going to happen this time around, but it's always important to know that these consolidations can go in many different directions. And the next few weeks will undoubtedly produce its own unique price action, but it's important to keep an open mind and be aware that various scenarios could play out from where we currently are. I think the approach at this point, I think the approach right now, it's to be conservatively optimistic. And what we know is that the overall trend remains to the upside. At this point, there's nothing to say that that's changed. The overall trend is up. I don't see any evidence to suggest otherwise when we take in the structure on this chart. And we also have a market that's trading above its moving averages. With the moving averages, market is trading above it. Current price is above the averages, and the averages are rising. So they're all the building blocks of upward trends. And also we're seeing buying interest on the pullbacks. So of course, this rally off the 100-day moving average, we're getting that buying on the pullbacks. So I think that's all positive, and I think that's good reason to remain bullish. The cautious component of where I'm seeing this at the moment, it's all to do with the timing. So my take on this is that we've had this big rally off the October low, strong period, significant gains, and my take is that it just needs more time to consolidate and to consolidate that previous rally. And this is the thing, big rallies often lead to several months of backing and filling. You get markets that they make these gains, then they just back and fill. They go sideways or they come down. They have zigzag pullbacks, all sorts of variations of those, but they typically follow strong periods. And so, look, is that going to happen this time around? And what often happens is when you do get these periods, then they often establish new platforms from which we can then get higher levels. So, will that happen this time around? Only time will tell. There's no way to know, but it's important to be aware of those possibilities. I was also having a look at the Nasdaq equal weight a little earlier. So this is an ETF. It's an equal weight ETF for the Nasdaq 100. And I think what's interesting here is it's been slower to rebound than the other main indices. Say, looking at the Dow or the Nasdaq 100. It's the Nasdaq equal weight has been the slowest to lift off those lows. It's also been struggling to get back above the 50-day moving average, whereas the other indices you'll find are already above there. So I think the price action appears heavy in the equal weight, and it just doesn't look like when we compress this, we just look at it in its entirety. To me, it doesn't look quite like it's ready to be charging off to to new highs. And now this is only one component of the market, but it could be a clue. Nonetheless, it could be a clue that there's more consolidation coming overall. So from that perspective, I'm just being conservative when it comes to buying. I'd rather see some more consolidation and then buy a breakout to new highs. That said, I'm entirely comfortable staying long stocks. As I often discuss, I'm using wide trailing stops with the aim of seeing off moderate levels of volatility. So if this market were to chop sideways, if it were to even come lower, those wide trailing stops can help see off moderate levels of volatility. And the beauty of this approach is that if I'm wrong about a consolidation unfolding over the next several months, if I'm wrong about that and the market just charges off to new highs, well, I've already got plenty of players on the field. So I participate in an upside rally should it occur. But if we get sideways, my wide trailing stops, which are set below the market, can help me stay in a move while it plays out and then continues higher possibly later. So I think that's that good way where you can get the best of both using those wide trailing stops. And now I'm going to have a look at the small caps in a moment. But first of all, if you're getting some value from this, please hit that like button. Leave a short comment. Just, hey, thanks for the video. It tells YouTube you're watching. YouTube shows other people. It helps me heaps and heaps when you do that. So please do those things. Now, let's just have a quick look at the small caps. I'm going to have a look at the iShares Microcap ETF this week. And it's similar to the Russell in the way the price action looks. I think this segment of the market has lots of upside potential when we just compress this price action, see where it came from the 2020 lows, the rally, the big decline in the sideways period, which has gone on for a couple of years. I think when you take all this in, I think it looks really constructive where we currently are. I think there's lots of upside potential for this to head back to new all-time highs and beyond. I like that we had that false break late last year, broke below support, couldn't get follow through selling, couldn't sustain those lower levels, snapped back above the moving averages with a strong rally off those lows. And then the last 5 months, we've really been just tracking sideways. So as I said earlier, strong upward periods often lead to multi-month consolidations. That's very much what's been happening here. It's encouraging that we've had this strong rebound off last month's low. I think that's a positive. I think it's a sign of accumulation on pullbacks, which is something we always want to see in a healthy market. I don't think there's a hurry to do a whole lot today, but what I'm looking for really now is a breakout of this range, which has been in place for coming up to 5 months. A breakout from there, I think that could really set up an asymmetric opportunity. An asymmetric is where you can have relatively low risk for relatively high reward. So yeah, that's one of the things I'm keeping a close eye on over the over the next few weeks. So look, I think we shall leave it there for this week. Thank you for joining me. Hopefully that's been useful. Hopefully you get some ideas from it. And I look forward to coming back, talking to you next week. Till then, bye for now.